Hi everyone, it's the 22nd of January 2023 and I'm going to be making my weekly prediction for the week ending on the 27th of January 2023. Now before I say anything in this video, I want to let all viewers know that any predictions made in this video are subject to market risk and it is highly advisable to consult your financial advisor before taking any trades based on this video. Now let's get into it. The first thing I want to talk about is the candlestick pattern that is made during the week. Specifically on the daily chart, the chart has made a Morningstar pattern, which is a bullish pattern as the market has gone down, gapped, and then there's the bottom candle, and then there's a long white candle. Now, usually this would mean that I would immediately say take an upwards trade. However, there is a clear no trade zone that I want to outline, and I have written it in the document here. The immediate resistance, or 4003 and 3807, are the points where the no trade zone lies in, because the Morningstar's resistance are here and here, and until this resistance is broken, it's not advisable to take a trade. Additionally, as you can see here, the price action has formed a cup and handle pattern, and the neckline of that pattern is also at 4003, which means that if there's a possibility of a bullish breakout, that neckline needs to be broken before taking any trade, reinforcing it as a strong resistance line. Now, the close of the bottom candle can also be taken as a support line, as the market has pushed up from here. And until and unless the market breaks down of the support line of 3899, it is highly unadvisable to take a trade. Now that we've talked about the no trade zone, as you can see here, I've drawn a clear channel. Now, as aforementioned, the cup and handle pattern has the handle here, and the price tends to travel in the channel. So in addition to this no trade zone, if there is a breakout or a breakdown of the channel, there is another signal which shows that the market has a strong sentiment in that direction, giving even more reason to stay neutral for the time being until there is a clear breakout or a breakdown. Additionally, if we go back, I have drawn an ascending triangle, as this is the resistance and there is an upward sloping trend line here. Now the thing is, if there is an upward breakout in the market here, which is highly likely considering the fact that almost all cup and handle breakouts are generally upwards. However, before taking a trade, as I mentioned, 4003 is the resistance line. But if the market breaks this resistance line, there is a strong possibility that the market continues to rally upwards. Now, there's no guarantee that it reaches the value of 4087. However, at some point in time, that is the next resistance line that I want to talk about. The next support line, if the market breaks below the support line of 3899, is 3765, which is the bottom of this consolidation range. Additionally, this support line happens to be the support of the monthly chart. Now, if we take a look here, the monthly candlestick pattern is an inside bar, meaning that this month's candle is completely inside the last month's candle, and the support and resistance lines are derived as the high and the low of the previous candle. And if there is a breakout of these support and resistance lines, there is a strong possibility that the market continues to trend in that direction. Therefore, I have made these two as additional support and resistance lines, which if we go back to the daily chart, we can see here in the form of this resistance and this support line. Now, the next support and resistance lines above and below, although far-fetched, are 4278 and 3582. Now that we've talked about the daily chart, let's go into the weekly chart, as the weekly chart has also formed an interesting pattern. Specifically, it's formed a type of spinning top candle, which is a variation as the body is shifted upwards. It still shows a amount of indecision, further emphasizing my point that it is advisable to stay neutral in this time until there is a clear breakdown or breakout. Even in the weekly chart, since patterns are fractal, you can see here the resistance and support lines still apply in this chart. And even for the weekly chart, until there is a breakout or a breakdown, unadvisable to take any trade. Finally, let's take one last look at the monthly chart, as there is a downward sloping trend line in the monthly line, and that also translates into the daily chart. As you can see here, it is this downward sloping trend. And all this does is act as another resistance point for the possible breakout. Because if the price action continues to break the channel of the cup and handle pattern, the resistance line of the neckline, and of the weekly chart, plus the downward trend line of the monthly charts, then it is three confirmation signals of high bullish sentiment as they have broken from all the support and resistance points. Now that we've covered the technical aspects of the chart, let's go into the option chain. So for the monthly expiry, the highest CE and P are both 4,000 with no change. However, it gives no clear signal for the monthly movement. The 4,000 CE is 67.52 and the 4,000 PE is 89.37 in premium, with the put to call ratio being 1.87. For the weekly expiry, the highest CE is 4,000 and the highest PE is 39.50. Now there's no change in the CE, however there's a plus 275 change in the PE, which is because in the last videos I have been using the plus and minus 50 strikes for the call and put. However, recently I started using 10 strikes above and 10 strikes below, as using that many data sets creates problems as they're overlaying trades from earlier months or earlier weeks, which cause a high volume in one value. However, using 10 strikes above and below make it so that new trades are favored more. Regardless, it gives a bullish signal, but that can be invalidated because of the simple fact that there is not a large enough data set. For the 4,000 CE, the premium is 20.87 and 3950 PE is 24.75, with the put to call ratio being 2.14. Now finally, the daily expiry has a high CE of 4,000, a highest PE of 3950. There's a plus 50 change in the CE and a plus 300 change in the PE. Now, for the PE, for the same reason as the weekly expiry, it's because of the data set, there is a plus 300, but regardless, it gives an ambiguous signal as the CE is more and the PE is more, therefore it equals to no signal at all. And the premium for 4,000 CE is 1.20 and the premium for 3950 PE is 0.12, with the put to call ratio being 1.78. As you can see from all the analysis here, there are no clear signals from the option chain. However, there is some bullish indication from the candlestick pattern. Regardless, I've identified a no trade zone, and my view for the week is that the market should be neutral, and until and unless this no trade zone is broken, there's no point taking a trade, and it is highly inadvisable. However, if the consolidation or no trade zone is broken, in whichever direction it breaks is most probably where the market is going to head. So if the market breaks upward, this prediction changes to a possible upside. And however, if the market breaks down, then my prediction becomes a possible downside. But this is my video for the weekly prediction of the week ending 27th of January 2022, and I'll catch you in the next one.